gentle ledger. Today is Tuesday, January 20th, 2026, and the market feels like a sudden gust after a still morning, unexpected, palpable, and quickly reshaping the landscape. Now let's turn softly to the U.S. indexes, where trading resumed after Monday's holiday with a broad sell-off that erased much of the year's early gains. The Dow Jones Industrial Average closed near 48,488.59, down about 1.8% from the previous session, as broad risk aversion swept through large-cap names. The Nasdaq Composite fell to approximately 22,954.32, off roughly 2.4%, reflecting outsized pressure on technology and growth shares. The S&P 500 slid to about 6,796.86, a 2.1% drop that marked its steepest one-day decline in months. Even the Russell 2000 was not spared, retreating to around 2,645.36, down roughly 1.2% as smaller companies felt the risk-off tide. These declines were triggered by a wave of geopolitical and tariff-related headlines that quickly weighed on investor sentiment. Gently moving into the corporate highlights, company-specific stories echoed the cautious backdrop but offered subtle nuances beneath the surface. Amazon shares ended down about minus 3.0% as consumer tech faced renewed pressure amid broader selling. Nvidia and Tesla slid near minus 2.0% to minus 2.5%, illustrating how marquee growth names were particularly sensitive to overnight headlines. In financials, JP Morgan Chase dipped roughly minus 1.5%, while Goldman Sachs declined close to minus 2.0%, reflecting the general drag on bank stocks during the sell-off. Conversely, defensive-leaning names like Coca-Cola found relative footing, with shares rising near plus 1.3% as investors sought perceived safe havens. Precious metals producers such as Newmont and Barrick Gold outperformed as gold surged, and staples and utilities generally held up better than the broader market, signaling a subtle shift toward stability on a turbulent day. Overseas, in Asia and Europe, the market mood carried across with its own rhythms of retreat and recalibration. In Japan, the Nikkei 225 pulled back by about minus 1.1% as regional markets responded to global risk-off flows. South Korea's Kospi and China's major indices also traded softer, echoing the cautious global sentiment. European markets were broadly weaker, with the FTSE 100, DAX, and StoxX 600 each closing lower following U.S. sell-offs and tariff-linked anxieties. This synchronized pullback across regions underscored how interconnected market sentiment has become when headlines shift the risk narrative. In commodities and bonds, the story shifted with quiet intensity beneath the equity turbulence. Gold climbed to fresh record territory, reaching and holding above $4,700 per ounce, bolstered by safe haven demand as geopolitical risk surged. Silver similarly hit historic levels, briefly trading near all-time highs before settling modestly below their peaks. Brent crude oil hovered around $64 to $65 per barrel, while WTI crude sat near $59 to $60, holding relatively stable even as equities slid. Meanwhile, U.S. 10-year Treasury yields rose to around 4.30%, a multi-month high as bond markets recalibrated in the face of shifting risk perceptions. These movements painted a broader picture of capital seeking refuge and recalibration amid uncertainty. Turning now to the newer corners of finance, in crypto land, the tone mirrored equity's cautious refrain. Bitcoin traded near $91,000, down about 2 to 3% on the session as traders de-risked in tandem with broader markets. Ethereum and other major tokens similarly finished lower, reflecting reduced risk appetite rather than idiosyncratic weakness within digital assets. Rather than acting as an isolated beacon, crypto today behaved more as a proxy for broader market risk sentiment, responsive, connected, and reflective of global trader psychology. As this intense trading day fades, let's rest in the reflective summary and outlook. Today felt like a collective recalibration, indexes breaking from recent calm, cross-asset repricing taking shape, and sentiment clearly tethered to global headlines rather than pure economic data. From broad declines in equities to safe haven flows into gold and cautious repositioning in corporate leadership, the tone of the day was thoughtful, responsive, and attuned to a world where uncertainty can swell quickly. Tonight, let this thoughtful cadence accompany your evening, calm, observant, and grounding in a world of shifting horizons. Good night.